So on the call today, we'll do a WASD review, what came out on Friday, talk about world wheat balance sheets, kind of dive into the US side and what we're seeing for demand, spread outlook on where we're positioned, how we're rolling our hedges, a flat price outlook on short term and kind of long term, both old crop and new crop, what we're seeing in the West, and then tie in our position at the end. So WASD review, not much changes on the wheat side. They made some minor adjustments to exports within the different types of wheat, but overall it was a non-issue. The hard wheat side, really no changes at all. So pretty quiet for what we're trading. Nothing big there. On the corn front, we did see some big changes come out. They lowered yields, no change on the demand front. And, I think that crop has chances of getting smaller, but we'll have to watch that as we go forward here. And on the soybean side, also saw lower production. That was offset by lower exports and lower overall crush numbers. So one of the questions we had is, what do these reports mean? Why does the market move? So I put out the estimates that the market has pre-report. So all that the market's trading is what they think the crops will be, what the numbers will be, and what actually comes out on the day. So corn was estimating a crop somewhere around 183.7. USDA came out at 183.1. So, when you look at it right off the cuff, that's a neutral to higher reaction for the market. We traded 15 cents off of the lows for the week and have kind of held there. I think the market's pricing in a new kind of baseline for both production and where they think carryout will be. Same thing on beans. We're 40 cents off the low as of yesterday, almost a full bushel below what the market anticipated on production. And wheat came out kind of right in line, so it would have a neutral to bearish bias with what else is going on in the world right now with value softer. We've traded 30 cents off of the midweek highs. So, when we go into those reports, if anyone wants what the estimates are or this spreadsheet here that comes out just after the report, please let us know. So going into world wheat production, I always like to look kind of at a long-term view of what's changed in the world, how that's changed what we're seeing here in the US. So over the last 10 years, the biggest highlight is Russian production. So Russian production has increased 20 million tons. If you bounce around the rest of the world and look, they're pretty much in line with where we were 10 years ago. Australia and Canada can be up or down where they were, but the biggest increase is that Black Sea region. So, we went from being a price driver in world values 10 years ago to more of a residual supplier to the world. If the Black Sea and other areas have big crops, we really don't see any non-routine export demand. So here's a look at just major exporters. These are the main: Russia, Ukraine, Australia, Argentina, US, and Canada. So over the last 20 years, we've seen a lot more increase in overall production, with most of that being the Black Sea region. And on the right, kind of what leads me to being a little friendly wheat prices long term here is the major export ending stocks is kind of at a 10-year low. And, if we have another issue with a crop, which we're kind of staging there today with not optimal crops in the Black Sea region and still political questions going on how Ukraine and Russia will play out here over the next year, we could see a tightening of the world balance sheet, which could lead to, I'm not saying big moves in wheat prices, but at least holding steady to slightly higher. So this is just a look at on the top world wheat prices. These are all FOB in US dollars. So you can see hard wheat, soft wheat, kind of at the high end of the range. So when we're looking around the world at, non-routine business destinations such as not Nigeria on the far right, the US is not doing close to the amount of business we did 5 and 8 years ago. So they're buying French wheat, they're buying Baltic wheat, they're buying Russian wheat. The freight spread is more advantageous out of those regions than out of the US. So unless we're competitive on a FOB to FOB basis, we're not going to see a destination like Nigeria come back to the US in large volume. They'll always have some US wheat in that destination mix, but it won't be the quantities, as you can see in the chart that we did in 2020, 2021. Another big area that US wheat goes to is Mexico. We're still lagging. If you look at hard wheat, it's the blue line in there. We're lagging versus the last 4 or 5 years. That demand has gone partially Russian wheat. That demand has gone a mix of spring wheat, soft wheat, and the country has figured out how to blend wheat in country versus just buying straight hard wheat as they used to. So over time here, they're going to be a buyer of what is the cheapest net for them, whether that's Russian wheat with spring wheat, whether that's soft wheat with spring wheat, or just buying straight hard wheat. So that's one market here that, at current price spreads, Mexico, Black Sea wheat probably lands about $10 a ton cheaper into Mexico City than US hard wheat does. And at that price spread, they probably stick to US wheat. And we have seen the sales here recently to back that up. But if that price spread widens to $20 or $30 again, then they probably move back to another mix of Black Sea wheat and spring wheat. And on the far left, it's just a breakdown of the mix of hard wheat versus all US wheat exports. And over time, you can see hard wheat's becoming less of a mix in that total, whether that's spring wheat, white wheat off of the West Coast, or even soft wheat when they picked up some business to China last year. So the mix for exports is not as key to our overall program as it used to be 10 years ago. So then let's go into the U.S. Hard wheat balance sheet side. Looking at this year, USDA has us at 370 million bushel carryout on hard wheat. I think they're too high on exports, maybe a little too high on the food use side. So my carryout's about 18 million higher. If we don't see demand show up here over the next 2 to 3 months, that export number can continue to slide, but it probably lands a sub 400 million bushel carryout this year. Looking out to next year, I used unchanged wheat acreage. It's just a ballpark here today, and a 700 or a 750 million bushel crop. I think the key is you still land somewhere in the 390 to 415 range on carryout for next year. Really, the only thing that can change that carryout number is exports. U.S. food usage here domestically is very stagnant, as I showed on the bottom right there. Or we could pick up more feeding if corn values really spike and we have a decent crop in June, July. But, really the only two things that'll change it are feeding and exports. And the export side, I had an uptick there because we will need to move some wheat, and we'll probably get competitive June, July if we have another good crop.
Quick question for you, Biggs.
Yep.
On the carryout side of things, you see obviously our carryout's been growing over the last 3-4 years. What type of a carryout number do you think it takes for us to really see these spreads start to work and make it return a little bit more to the country?
So the last time that we had, I would say, drastically wider carries where we paid an interest calc or we paid moved to a VSR2 level was when we were closer to 500 million bushels in carryout. Not to say that 450 doesn't make a crack at it, but you need a combination of big crops, a big enough crop that it fills up storage that people don't have to overpay for wheat. Like today, we've got Cargill still paying 5 over or 5 under at Hutchinson, Kansas. So you need to get to a point where the space is taxed, there's no export demand, and any milling demand that shows up is covered up. And typically a 450 or a 500 would do that. But, can we make a crack at BSR2 during June, July with this type of carryout? Possibly. But I don't think it's long lived.
Thanks.
So I always tie in the balance sheet to our spreads, just like Ryan kind of said. That kind of leads into how we're going to position ourselves, what we're going to look at here going forward. So spread outlook, I put the charts on here because it kind of shows the seasonality of what happens with spreads. Historically, as you get into this time period, the market has to pay to pull bushels out of storage. Typically, those premiums start to firm and they get above delivery values. And that's when you start to see the seasonal low come into place. March tends to firm because you usually run into a time period where someone gets crunched for wheat. March, May then typically firms with it. So where we're positioned today, we've got our hedges scattered out anywhere between May, July, and all the way out through new crop today, with anticipation that you're not going to get paid much beyond full storage here short term, especially with Cargill and Hutch still paying above delivery values for wheat delivered into there. And what that tells you is the likelihood of anyone delivering a substantial amount of wheat in delivery is very unlikely today. If he moves his bid and the cash market stays where it's at, you might get a chance that someone will deliver wheat, but we haven't seen the ADMs, schoolers, Viterra show up to deliver wheat in volume in years unless those spreads invert. So, if we're trading here near full carry or near full storage, the likelihood of deliveries is pretty low. So move into a flat price outlook. We've had a pretty big sell-off here across the board. I still think 550 holds in the front month. That doesn't mean that like March, once we roll to the March, that we can't grind towards 550 again. But it's a pretty good holding value here. We start to get close to pricing into feed rations, especially with corn being around 430. And it's competitive, at least into our routine destinations at this price level. So, can we see some downward 535 trade? Probably, but it's probably a buying opportunity. Anything below 550 in the old crop side. If anyone has unpriced bushels, I would still have a target around $6. Anytime we've gotten a rebound, we've moved into that $5.85 to $6 range. And then we really struggle to get any momentum above $6. So if you guys have anything still floating out there or guys having pricing ideas, that would be my short-term target. On new crop, we're trading 591 and a half, kind of been in that same grind with the front month. We've traded as high as 630, 640 over the last couple months. My price target, at least initially here to sell something, would be 650. We have a lot of weather markets in the world to play out. We have freezes. So the opportunities for us to catch a 40 or 50 cent rally is pretty likely. But I think guys need to take those opportunities to sell wheat when we do see those present themselves. So moving into straight Western wheat outlook, the export demand continues to lag. So the opportunity for a big export program today is pretty unlikely. It would take a major political change, whether that is, the Black Sea cutting off exports out of Russia or something similar to that for us to become a non-residual supplier to the world. So for us to even hit USDA's numbers, we need to pick up more Nigeria, more Brazil, something that we haven't seen on our typical export sales every week. I mean, the Mexicos, Taiwans, Koreas, Central America, those are all kind of baked in at a 200 million bushel export number. And, we need to find something different. Domestic milling demand, it's going to stay steady. It's always steady. It's been the same number over the last 20 years. So, we'll just have to look for opportunities when the milling market steps up and wants either a specific protein or wants coverage Jan forward. I guess the one thing that we've priced into here over the last 2 weeks, 2 weeks ago, we were trading KC corn at about $1.85. Today, that's sub 140. So wheat's below 100% the value of corn. I think if that continues to move or someone needs to move some low pro wheat, we could see, some wheat move into the feed demand, but, that total probably only increases 5 or 10 million and really doesn't do anything to the overall carry out for hard wheat. Premium outlook. I mean, premium should appreciate. Historically, this is when we see the opportunity for basis appreciation. The market has to pull wheat out of space, especially with spreads paying full storage, and looking forward, you have long-term carries. So will guys, the big commercials need to move wheat in this case? Not as likely as they have in previous years. So unless spreads really firm up into inverses, the big commercial bushels won't move out of space, but it will give us good opportunities for us to sell any pops, at least in the domestic market or maybe the Mexico market. And the last one, any rise in premiums, if we see someone step up who's paying 10 or 15 cents more than where we've been here recently, it needs to continue to be sold. The spreads are paying storage only, they're not paying interest. So anytime we can take advantage of any premium appreciation, we're going to continue to execute wheat and get ourselves into a good position going into next year. So I'll wrap it up there on my side. Are there any questions? Anything you want me to cover?
Dave, on that Mexico export, can you speak just a little bit how freight's involved in that, or kind of what barge prices got to be out of the Black Sea area versus our rail rates?
Yeah, so if you take today at $225 Black Sea number, that is basically with freight delivered to Veracruz, which is kind of the main port for wheat to Mexico City. You're probably $255 a metric ton delivered, and then another $30 a ton to get to Mexico City. So call that $285 a ton or $7.76 a bushel. Then if you turn around and you look at hard wheat today, with freight, at least UP freight being a little softer, call US hard wheat $1.25 just to keep it competitive here delivered to the border. That's Laredo or one of the other crossings. And then you take another roughly $1.25 to get into Mexico City from the border. And that lands you about $8.10. So we're 25 to 35 cents more expensive than Black Sea wheat today delivered to Mexico City. Historically, that's about a $12 a ton spread. Historically, it's about $20 a ton spread that the market looks for to really take the risk of importing Russian versus US wheat. So, where we sit today, it's probably leans towards hard wheat. And as long as we stay somewhere between 550 and 585 futures, that probably maintains itself here, at least short term, that we price Black Sea wheat out.
Thanks, Dave.
Yep.
Is that the premium that the market in Mexico is willing to pay for US wheat over Russian wheat? Is that mainly due to shipment, logistics, the quality? I mean, or is it a combination of all? Or
So typically, part of it is when you buy a cargo from the Black Sea, you have to take 30 or 40,000 tons. So you're going to have costs baked into, storing that wheat, moving that wheat right off the bat. A little bit of that. And then also they have to blend historically spring wheat or another wheat into Russian wheat to make the flour quality.
thanks, Biggs. Any other questions before we hop into Ryan's?
Back to the carry out, we've kind of had a tough start with the wheat crop this year in some pretty important areas. We come in 50 million short, but say put us at 325. What does that do to the market?
So I think I put a 700 crop and a 750 crop. If you came in at like a 650 crop, the first thing you probably do is ratchet down exports. So you're going to, as the residual supplier, you're going to price yourself out again. So maybe it isn't a 1-to-1, 650 or 700 to 650. It's probably more like, all right, we dropped 50 million here. We probably cut 20 or 30 million out of exports. So it isn't a 1-to-1 on carry out. We still, even with the 650 crop, can probably land, 370 in carry out, which means you grind in the same full storage, somewhere around full storage on spreads.
What impacts that have on flat price on July 25?
If the market is anticipating a 700 or a 750 crop and we come out in the spring and a 650 gets done, that probably takes you that next level from maybe a 625, 650 to a 675. Because the market knows, one, you're going to price yourselves out. Two, it isn't going to make a huge change to the balance sheet.
What does it take us to get to a $7 July 25 wheat, in your opinion?
Probably a carry out of 325 and below. So that's a combination of us getting likely a bigger export program and a smaller crop. So that means you had something happen in the world that brought demand to the US and then we didn't have a crop. If the world has good crops, if you have a 85 to 95 million ton Russian wheat crop, the world will have plenty of wheat. The EU had a major issue this year, and we still haven't been able to push off of the lows here. Australia's crop is sliding the other direction, and it's still not able to change the world balance sheet much. So it's going to take a major crop issue for somewhere in the world for us to move that leg higher. Or if corn goes to $6, there's got to be some major outside push. It isn't the hard wheat balance sheet that's going to drive that price.
So
Worst case flat price scenarios, Russia's an 85 and we're a 750. Does that put us sub 5 cash price, flat price?
I mean, if they came out at 85 million, you probably grind in the same area. You know, the only time that so you've got to go back to almost 2020 or 2019, I think, when we traded $4 flat price wheat. You were also trading 180 to 175 black sea wheat. So there's kind of a relationship there. If you can hold 225 black sea wheat, you probably hold 5 to 550 hard wheat. And if Russia's really going to say that they want some sort of minimum price or some sort of export control, you're not going to dip long-term below these levels.
Any other questions from people on the call before we move on?
Can you go back to your carryout chart real quick, that first slide? Sorry.
Oh, you're good. This one?
The one before that, actually. Nope, I guess it was that one. So Dave, where's that carry out? I mean, it feels like we've been in the same market for at least the last 2 years as far as wheat goes. You know, domestic play, you know, limited stuff going into Mexico. What's that carry out number been trailing at these last couple years? Have we seen a lot of variability in it?
Yeah, I mean, so if you look at that 2023, we had a 223 carry out, 24, a 275, and then up to now USDA calling it a 370. So the biggest thing is the years of us doing 400 or 500 million bushels of hard wheat exports is not as likely. And I think the planted wheat acreage is a portion of that. Plus, you know, when we do get those bigger carryouts, it is extremely hard to pull that wheat out of space. So the export outlook, you know, 10 years ago, we would do 400 million bushels and you would see a big pull to the Texas Gulf, pretty easy execution. And with the Black Sea and some of these other origins growing good quality wheat, the chances of us getting there are not as likely. So, you know, the ranges and carryout are more tied to how our production is compared to what our demand looks like. You know, food, seed, the domestic side is pretty stagnant. You know, feed can swing a balance sheet 30 to 40 million bushels, but typically that's with, you know, a bigger production year because you get that Southwest Kansas, you know, had a big crop, or the Panhandle had a big crop. But those carryout numbers are just largely tied to production now and not really demand driven.